What kind of ROI do carriers see from prioritizing these resilient properties through Fora?
Yeah, so there's a couple things that I'd love to kind of touch on there. And when we talk about Foro, we separate it into two kind of different buckets. The first one is that property survivability portion and that model that we talked about. But then the other part is kind of touching on what you just said, like the distribution and consumer engagement piece of it too. So when we got into the space, so many people told us don't do insurance and don't do consumer insurance because it's really hard. It's a really hard problem. And a lot of carriers at the end of the day struggle to maintain customer engagement, find these new customer touch points where people will interact with their carrier and give them better information about how their policy is reflected in their day to day. And so I acknowledge that that problem is really hard. And we're still every day trying to like make it easier for people to understand and to gain value from it. But in terms of ROI that people are now experiencing, we have separated it into a couple of different things. So we have our quick assessment, which is all carrier has to do is just ping us with an address, and then we return the resilience score to them. So it's like you would ping any other traditional hazard model based off of the address. And from that, again, I kind of touched on it before, but it was underwriters can now spot more resilient properties in areas where they might have completely not underwritten anything. So they're unlocking new potential business in these areas. They're also often able to, at renewal, to select more people to give them additional information that unlocks business. So what I mean by that is homeowners can do a walkthrough of their property. They answer questions. They take a few photos and videos. And then we're able to synthesize that into a more qualified resilience score that proves to an underwriter, hey, they are doing this work. They're a more profitable consumer. You should still be offering them a policy, even if maybe previously you wouldn't have been able to. There's the premium increase, there's the retention benefit, which I think is hard to quantify in some areas, but we're quantifying that in terms of not only like open rate and engagement, but also how many people after renewal interact with us and stay with their carrier versus the average number that interact at renewal and then leave or go shopping around somewhere else. So what we found is if we can get even 2% of consumers to interact with an assessment, then we're much more likely to get people to stay with their consumer or stay with their carrier